Today, an update from the mortgage industry frontline. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. Today, I'm joined by the CEO of Toc Home Loans. Hello, Anthony.
Hello, Martin. How are you?
Very good. Good to have you back with us. It's been an interesting few months, hasn't it?
It's been a very interesting few months, and I think there's been some good progress made on some initiatives that are going to benefit our consumers.
Which is a good thing. So just so that people get a bit of a sense, let's just recap a little bit. Toc Home Loans has been around for a little while now, growing quite fast, but you've got a very differentiated view in terms of actually how you come to market, haven't you?
We do. I mean, our view is that all the technology exists for customers to be able to self-fulfill a home loan, as in any utility style product, for that to occur responsibly, using data validation to fully assess their financial position, and then also because of the cost savings available from that technology, for those savings to be passed back to consumers. And we think, those things in aggregate are good, and we're working hard to get them right.
Yeah, and it's worth, I think, also saying that the responsible lending stuff, which of course everybody's been talking about via the Royal Commission, you were ahead of the curve on, because essentially your algorithms are actually significantly more enhanced than many other players.
True. I mean, we launched with the technological capability to be able to fully validate someone's financial position digitally using their bank account data. That's income, expenses, liabilities. If they miss liabilities, to identify those through their payment flows, if they're linked in any way to those accounts, missed payments, and really also to, in the expense space, really validate and understand a customer's true expenditure. And, really the reality is that I think if those steps have been in place for some time, the level of indebtedness in Australian society that we have today at the consumer lens would not have occurred. As you know, Martin, we've talked before about some of the stats we see, some of the overborrowing behaviour that has been in one shape or form either accepted or, hate to say it, possibly in certain circumstances actually encouraged. But really, we do that. We did that at launch. That platform gets better and better. And we're really excited by the fact that ultimately, as open banking rolls out, what we do will become the norm, and that's really exciting.
Yeah, and so what it basically says is that people shouldn't panic about tighter lending standards and appropriate lending standards. There's a way of handling the industry and the market which actually creates still a very viable business, but stops all that over-borrowing or over-lending and all the risks that have been built into the system because of the last decades of, frankly, too loose lending.
It's a transition, but absolutely, it's actually, let's be clear. If the amount you can borrow for that property is a more sensible amount, you may still end up being able to purchase it just at a more sensible price, and the burden on you as an Australian citizen in terms of the percentage of your income that goes to paying off your house may be more sensible. And it's actually over-borrowing caused by over-lending that's actually the issue. And I know you've been calling that out for some time.
Absolutely, yes. So the credit impulse, if credit is more available, home prices go up. Getting more credit to be tied to more sensible income multiples means that prices will come down, but that is actually good and appropriate, I think, bearing in mind the international outlier that we are, if you look at the broader data. Of course, the Royal Commission had quite a lot to say about the mortgage industry and mortgage brokers. So what was your reaction to what the final report actually came out with?
The final report was clearly, for a business model like TikTok, favourable. And it was favourable in two parts. The first part is it was favourable because it effectively is challenging the value add within the current industry structure. And when you have that occur, obviously distribution channels as they exist today are going to be impacted. We have a digital proposition that will benefit from that disruption, because it probably will expedite the speed at which customers start to self-fulfill online. They're certainly not all going to go back into branches. And when people talk about the competitive landscape and the consequences to competition of those recommendations becoming law, we need to remember that industries evolve, and they will evolve more rapidly when forced to do so. And actually, the transition to digital is a really good thing. Customer convenience, cost out, faster customer experiences, they're all possible using online mechanisms. And so we think, A, we're well placed, and B, the pace of change will potentially be greater, which is good for us.
Yeah, and of course the focus of mortgage brokers having the best interests of customers, which many people would have assumed, I think, that that's what they should be doing and were doing when perhaps they weren't, really does change the game, doesn't it?
Well, I think what changes the game is the fact that the whole industry from a distribution perspective is going to have to demonstrate that it's actually creating value in the eyes of customers. To be remunerated if the findings are, all 76 findings are implemented. That will certainly be the case. So I think that, that will clearly need anyone who acts as an intermediary for a home loan to justify the value add. And I think brokers are part of that. Financial planners and accountants that still offer home loans as part of their proposition are part of that. But absolutely, that is the case if that's legislated. And I think the other thing that we need to bear in mind here, that the other benefit that will come with this through the digitalisation is the inherent reg tech embedded in a platform like TikTok's, whereby we do make reasonable inquiry of the customer's requirements. We do it can't be missed. We do run all our validation steps that we run, and so it means that actually, whatever that distribution landscape looks like, it will need to identify and implement solutions that cover those basic obligations as you have as a lender or an intermediary. So I think it's all good. I'm really obviously positive and excited about the findings, and can't wait for them to be implemented. And the faster timelines, the better from our perspective. We're ready to go, but we also want to make sure that customers can get a solution. So we'll work with the industry through that transition.
And it really does play into your court, doesn't it, with a focus on the customer and effectively the best outcomes of the customer, firstly, and secondly, making sure that the responsible lending standards are actually being adhered to, and the records are there and can be proven post the event as well, which of course is critical with regard to the way that the regulators are now thinking about it.
Yes, and obviously you can appreciate, Martin, that the phone's been pretty hot since those findings came out. So we're really excited by that, and the opportunity to, work with other institutions to, help manage the transition. And we have some exciting announcements. We've obviously partnered with Bendigo through their Bendigo Express proposition. We've partnered with La Trobe with the first collab product set. We'll be launching mortgage loss insurance on our platform the end of March, early April. So we'll be, able to help a broader range of Australians fulfill their home loan needs through our digital platform. But beyond that, there are there are some really exciting opportunities for TikTok to partner with the industry and really expedite and fast track that transition to full validation. As you mentioned, the reg tech within the platform holistically around responsible lending and the obligations that ASIC is also providing more information on soon, or has already, and is looking for feedback around changes to RG 209. So obviously they are pretty much also in line with what we already do if they're implemented. So yeah, it's exciting times at TikTok.
Okay, well, let me just pick up the commercial angle a little bit, because you announced a few days ago effectively that extension of your business to effectively offer home loans for some of the SME people that would find it difficult more normally. I think that's an important thing to talk about, because I know from my household surveys and consumer and business surveys that it's actually the self-employed SME that often finds it very hard to get finance.
Yeah. So what we did was, in conjunction with La Trobe, obviously one of the major non-bank lenders, is look to which parts of their product set it made sense to digitalize. And, very much for us, the segment, to your point, that is being underserved and is finding solutions that are much higher price and very process cumbersome, were the self-employed and the small business owner. So what we did was work with La Trobe, and we worked on digitalising their policies and requirements and align them to what we do. So what that facilitates is, a more rigorous, holistic assessment along the lines of what we do for consumers, but with a broader policy set that actually can facilitate the needs of small business, because and self-employed, because the data where it's available is still very prevalent to formulating a validated view of financial position, for example. So it's an exciting step. We've only just started that journey. We've focused on getting the development done. There's a whole bunch of website changes and also marketing effort to communicate that proposition. But we think that, as a compelling proposition for that cohort, that we're creating one, and it certainly will, impact the business banks of the Big Four. It'll impact the construct of how those customers are currently fulfilled today, including, some of the customers moving to, unsecured lending structures at pretty high rates, because it's just too hard. It's too hard to utilise their home to expand their business, for example. And we see that as a conscious business decision by a small business owner. These people are, being assessed holistically. We're not cutting any corners, and we're excited by where that can go in terms of fulfilling more Australians' home loan needs.
No, it's good to hear, and I'm sure there will be some interest from the SME sector, because, as I say, my surveys say again and again, they really do struggle, and particularly the major banks have really got quite aggressive in terms of their inability to service them and help them. So, final question, Anthony. More broadly, what are you seeing in the market? The in credit rate is sort of falling overall a little bit for home loans, but it's still, sitting around 5%. So there's still quite a lot of volume there, isn't there?
There is. We had our second best month ever in January. We'll be probably at, if not exceed, our best month ever in February, even though it's a short month. There is good, sensible demand. And, one of the things that actually has changed probably from when we launched is, whilst we were very fast, we were very rigorous, which meant that actually customers were a little bit confused to start with why we were actually asking what we were asking when they weren't auto-decisioned. And now they understand. So it's good. People are focused on it. And I think, hats off to the good work of lots of bodies, obviously the Royal Commission, the work you've done for a long time, some of the equity analysts in really flagging a macroeconomic problem that hopefully we've caught early enough that we're going to see an orderly transition. And going back to your point, I think that's what we're seeing today. So that's good.
Excellent. Well, I thank you very much for your time today. It's really good to catch up again and to hear what's going on. And perhaps we can drop in again in a few months' time to get the next instalment of Toc Home Loans.
Thanks. It's a pleasure and always good to talk to you, Martin.
Thank you very much for your time.